Hi guys, Juliet and I are here to say hello today. Thank you for being here on my very favorite day of the week, which of course is Tuesdays because I get to spend them with you. I'm going to start with the burning question that everybody is talking about, even though for me, I don't really care that much about it, to be honest with you, but everybody that's tracking it, where are we with the gold-silver ratio? So can I have my slides so I can show you guys? All right. So this was through yesterday. So at this point, we have broken that $50 level that I talked about, and we are at a 38 to 48.35 to 1 ratio. Okay, so where's it going to go from here? Well, in 2011, it got as low as 31.6. So that would be the next level of support and where I would expect it to go. I will let you know if we break through that, if we bounce off of it, whatever, I'll pay attention for you. And then we can talk about it on Tuesdays. But this would be my next stop, 31.60 on that ratio. However, here's the thing. I mean, the ratio trading was set up as a trade. That's why I don't really, I use it as a signal because what was happening in April of 2011. And do you remember when silver hit a peak of just shy of 50, right? And started to form that second cup that we've talked about. So silver is the fuse. It is what goes first. So we would expect this decline, even like we saw when I showed you the chart from Germany back in the 20s. So that ratio grows more narrow, and then once the hyperinflation kicks in, then it grows wider again. But you aren't going to sell your silver and convert it back into fiat. Maybe if you have, I don't want to say too much because quite frankly, I don't think that you ever have too much gold or too much silver. But you know, it depends on how you've built your position. So you're always welcome to give us a call, have that conversation. We can lay out what your strategy should look like, and then you can make educated choices. So this is where we stand with that, but I really need to talk about the most important thing that's actually happening now, which is what's going on in the global bond markets and out of Tokyo. The Tokyo whale, I'm going back to 2016 on this because there are always unintended consequences. And what I'm also trying to show you is that the choices that are made over here, well, governments and central banks like distance between the choices that they make here and how they're delivered to you so that you don't connect the two. But I'm bringing this up because Japan has been setting the rule book for all of this alphabet soup of quantitative easing, QE, QT, double QT with the nose on the top or whatever. All it is financial engineering that may postpone the inevitable, but it does not eliminate the inevitable. And so what did they do? In order to support their stock market, the whale gobbled up tons and tons of stock, like 90% of the Nikkei 225, which is what you're looking at here. I'd like you to look. Yep, they just broke out of that cup formation. Can you see that? And look at, even as their bond market is in massive distress, you see their stock market making new highs. But they are the top shareholder. And so once they started buying in a very pervasive way, it made things look okay, but that's just engineering. That's all that it is. And we're going to see what happens from it. But this melt up part, I particularly bring that up because I believe that we are in melt up. I've been talking about it for a while now. And that's the markets melting up. There's all sorts of bad news that's coming out right now, and especially in their debt markets, which is the biggest and most important markets in the world. Not necessarily Japan's debt markets, but just the debt markets as a whole. So there, the stock market is just screaming up. Makes it look good, but it's really a flight to safety. And again, going back to 2025, by 2025, the Bank of Japan now owns more than 52% of all Japanese government bonds. And that was what? Back in April. So it's higher than that now. So what do? Why are they buying stocks and they're buying bonds? It's called perception management. If they can make you perceive something, then they can dictate how you move forward. Don't be fooled, because what's happening is the markets are losing confidence. This is the 10-year Japanese government bond, and look at where that interest rate is. It will spike above that more than likely, right? But you see that cup formation, it's going to go back to more new highs, just like it is here in the US, in Europe, in China, everywhere else. This is not just one little isolated incident. Oh, that's Japan. But does it completely annihilate the carry trade where you buy it with a much lower or even negative interest rates you borrow from Japan at negative rates, and then you go out and you put it into some other asset or instrument that will give you a higher yield? Well, with interest rates at this level, that trade is dead. But it doesn't mean, oh, it's gone. Boom. There are no consequences. Yes, there are consequences, because traders have to unwind their positions, which puts pressure on global stock markets as well as global bond markets. And the derivative markets, those are so opaque, we can't see what's really happening in them. But I could tell you, just like 15 years of zero interest rate policy, remember how that works. Interest rates, market value of the bonds. This is when it's issued. So when interest rates go up like we're seeing it now, the market value of the bond goes down. As long as there's not a run on the banks, that truth can be hidden. But when there is a run on the banks, then the banks are forced to sell these underwater debt instruments, and it becomes more clear because that pushes interest rates up even more and market value of the debt down even more. And it's more than just bonds, right? A mortgage is a debt instrument, a car loan, a student loan. Any kind of debt is really going to be majorly impacted by these interest rates, because now they have to roll it over in a higher interest rate environment. And you might recall the interest on the debt that the U.S. is paying and how that's gone up exponential. So that's what we're looking at here, because the 40-year bond, so again, just as a reminder, right? If this is when the bond is issued and this is when it matures, look at the further out the maturity, the greater the market price swings. So the closer it is to when issued, the short-term bills that our government's issuing a ton of, especially with stable coins, right? That will have less of a movement when interest rates move. But these 30, 20, 30, 40-year bonds, that's where you get the greatest movement. And so a lot of governments have been going shorter and shorter and shorter and shorter term. The problem is then they have to roll that debt over and pay even higher interest rates on it. So this is historic, because this is not ever, I don't think the Japanese 40-year bond has ever been this high since it was issued. And a seismic repricing of risk across Asia with global bond market implications. That's what we're seeing here, is that loss of confidence. And we've talked about confidence a lot. We will keep talking about confidence, because every single Ponzi scheme has two key requirements, period, end of discussion. If you miss either one of them, it's game over. One is New money. Okay, they got that covered. They can just print it. No big deal. They'll just print it and devalue all the currencies that are out there. But the other is confidence. And remember, we've talked about this where we watched the layer of confidence, bank to bank. That went bye-bye in 2008 when the banks stopped lending to each other. Central bank to central bank, that was 2015 with the Swiss surprise when the Swiss central bank kept vowing to maintain the peg to the euro and then at the last minute broke that peg. That one's gone. And 2022, market to central bank confidence when they kept promising that they were only going to raise rates 50 basis points. And then at the last minute, and I will never understand why they gave this away, never, but they did 75 basis points. One layer of confidence remains, but the spiking global interest rates that we are experiencing right now, because it's not just in Japan, is showing you that the bond markets, the largest foundation, how money is created in this system, it's breaking down. And this is huge. We still have the public to do it, but a headline that I saw this morning, I haven't read it yet, and I haven't had time to do anything else with it, but I promise I will, is that consumer confidence plummeted to 2014 levels. What was happening in 2014? Sovereign debt crisis, right? So there was a bond market crisis that was happening. Most of that centered in Europe, but make no mistake, we are incestuously interconnected. So it doesn't really matter where it starts. It will finish with the world. Because much as we talk about deglobalization, and certainly in some areas that's happening, but not in the financial area, that's getting more and more globalized. And a move that they want to go toward a one world currency. So how has this impacted the equity market, the stock markets? Well, you see it. This is equity volatility rises after sharp sell-off in JGBs, so in the Japanese government bonds. That white line are the 30-year JGBs. Look at how that interest rate spiked. I mean, that's exponential. It's straight up, right? And there's the Nike volatility. I already showed you how it was making new all-time highs in a flight to safety bid. It's not so safe. I mean, the government owns all of the stock market too. Do you really want the government and the central banks to dictate every single thing to you? Because that's where we're headed. That's why you have to have physical gold and silver in your possession. That's why coming together in local community to create that surety in food, water, energy, security, barterability, wealth preservation, and shelter. We got to get this done, and it takes a community. So locally to create surety in all those mantra areas, and globally to, I don't know, how about taking our power back by putting redeemable gold in the system so that you don't like what you sing, you go in and you pull the gold, and that forces flipping fiscal responsibility. The volatility is frankly caca. Why? Because the government can go in. Do you remember? I was there on Black Monday in 1987. I was there. That's when the plunge protection team was born. Do you think you're really seeing anything that's real in these markets? It's just a wealth and risk transfer mechanism. And the wealth is not going to float your way because we all know my $10 trillion Zimbabwe note, of which I can buy absolutely nothing. But let's take a look at some of the pattern shifts that we see here, because quite frankly, it is not what we're seeing today is not surprising because we've gotten the warnings, and that's in pattern shifts. So at the beginning of this chart, you can see how the stock market volatility was right. It was congruent. It was right along with the yield on the 30-year JGBs. That would be a controlled demolition. But all of a sudden, there's this massive spike of volatility back in April of, I think this chart goes back to 2024. This huge spike. People only notice when things happen quickly, but that's why they trained us to think shorter. That happened 15 seconds ago. That's old news. No, it isn't. If you learn how to read these pattern shifts, that gives you a heads up, even if you don't necessarily know why or what's going to happen next. But that was when the yen carry trade really started to unravel. You can see the difference between the two. One was overlapping, and then they got control of it. And it was kind of like the yield is up, and then the volatility nice and calm in there until we get toward the end. And then there was a major downward push in volatility. They can do that just by derivative contracts. This is not that big of a deal for them. It costs them nothing. And by the way, they just print the money anyway, so it truly costs them nothing. But then there was a larger spike in that volatility. Can you see it? And that spike started before this rapid rise in the 30-year JGBs. Understanding when patterns shift, not even having to know what it means afterwards, but you know that something is changing. And what we're really experiencing is a structural shift in the bond markets, because what creates money in these markets? The full faith and credit of the government. And so the spike in these interest rates is showing that loss of confidence. And the breakdown in the communication from nation to nation. I mean, we don't live in the same world that we lived in. Even before 2025. And it was already changing from 2020. And that was already the changing from 2008. And in my opinion, that's when the system died. That's when I personally went, oh crap. Yeah, I'd been accumulating gold and silver because I knew this was a currency life cycle issue, and I knew how undervalued gold and silver was, and I knew that this couldn't last forever. I didn't think I would see it in my lifetime, but here it is. And I have been born and groomed for this moment in time. And if I can help you recognize when there's a pattern change, if I can help you become your own central bank and become absolutely as independent and self-sufficient inside of community as possible, that's what I'm going to do. And if I can get redeemable gold back in the monetary system for the world, let's change the world. I don't like the direction it's going in. Let's do something about it, because I think you're here, so you feel the same way. And I'm going to show you the Japanese yen. This is to the US dollar. So over this is just a month chart, right? We're looking short term. Look at the drops in it. But the US dollar to the Japanese yen is actually stronger than the dollar. You know why? Because it's relative. It's one fiat currency to another fiat currency. They are both garbage. Doesn't matter which one. But you and I could be listening to these talking heads and they go, oh, the dollar is strong against blah, 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 or the dollar is weaker against blah. That is only matters when you're traveling, because in all cases, every single case of the fiat money, every single case, the money is losing value, even as we're sitting here and speaking. And I have a Goldback here, so that shouldn't be in that mix. Okay, so you can see the drastic shift in the Japanese yen to the dollar. But let's look at Let's look at the spot silver market. In the last month, that's up 34%, over 30, almost 35%. I think I did this to the month. Yep, 1 month. Now look, the reality is prices of gold and silver have been suppressed forever because a rising gold price is an indication of a failing currency. Can you see that the currencies are failing now? And I'll show you too. Look at this very interesting pattern that I saw where you would have a flat line and then a spike and flat line and spike, flat line and spike. I find this to be quite an interesting and telling pattern. It's almost like you can see the confidence eroding when you're looking at this chart. And finally, we'll look at spot gold. Now, you see similar kind of patterns, a little different to silver, but basically that same kind of pattern and that same kind of spike in the end. And how did that, Bitcoin was supposed to be digital gold. Is it digital gold? No. The world has spoken. Now look, I'm not saying that they can't manipulate it because it's still pretty shocking to me that you see bankers and governments and central bankers rushing for adoption on this stuff. Why is it below 90,000? I mean, I could tell you what the fundamental value of an ounce of gold is. I can't tell you what the fundamental value of Bitcoin is because we don't have enough history to know what that is. With gold and with silver, oh, heck yeah. We've got thousands of years of history to determine that. And I know, and it's okay. You do whatever you want. I'm not telling you that you shouldn't own Bitcoin. But what I am telling you is if you do make that choice, make sure you are properly diversified because this Bitcoin, this is just a physical representation. There is no physical body for it, is not this. This uses energy. This stores energy. This is based on formulas. This is based on work. This is used in one place. This is used in 33 places. It's entirely up to you. You do whatever you're comfortable with, but it looks like the jury is saying, no, this is not gold. And of course, we recently saw that Jeffries sell Bitcoin, buy gold. Why? Because all you can do is convert it into this stuff. That means that whatever's really happening to this stuff should also be happening to the risk markets. That's what's happening. Because if you can only, that's my $10 trillion Zimbabwe note. Goodness gracious, there's nothing else that I can do with it, is there? But convert it into, in this country, dollars. Just saying. And hedge fund titan Ken Griffin said Japan's bond market rebellion is a warning sign that the U.S. needs to shape up its finances. But they can't do it because they're backed into a corner. And all they really have is as much of this as they can do. Because, hey, I said this was going to happen. It's happened where the Federal Reserve were allowing their balance sheet to run off, which means that they were not reinvesting the dividends or the principal when a bond matured. They were just allowing it to go away and then not reinvesting the money. But they've turned around and they've started buying again. I think it's at $40 billion a month. I could be off on that, but they're buying again. They have to because we don't have anything to prop this up. Now, I'm not saying they can't come up with something that I haven't thought of because they certainly did that with QE. I'm not going to lie. I didn't see QE coming, but they used it up. And how much room is there on the balance sheet? I mean, it was less than $800 billion in 2008 when they did this massive, they started the QE, and we were appalled by that. But that's all that they have. And all of that new money that they printed and pushed into the system, it's sloshing around there. Why is real estate up and stocks up and bonds up and all of this? Because of all of that new money. It's not that they create it and then it disappears, but Japan's bond market rebellion, it's a warning sign, and there's nothing that the world can do. Are they going to stop spending? Oh, heck no. But here's the piece, right? As Americans pinch pennies, Goodwill sees a resurgence. Goodwill stores are thriving, which is good news for them, but that's really an indication of people that are still shopping, but they are trading down. And again, this one, economic fear running deep. Yes, because it's the affordability factor. So what are they going to do? They're going to issue stimulus checks? What would that do? It would devalue the currency even more. All of these things that were supposed to stimulate the economy, well, they did for those at the top of the K, but they didn't for those at the bottom. And that's where 99% of us are. You want to eliminate their ability to create that K-shaped economy? Take our power back. One person can't do it, but if you're part of a group and we can get 3% of the population to do it, we can get that in the system. We just have to demand it. Because what happens in Japan does not stay in Japan, because we are all incestuously interconnected. And the spike in long-term government bonds has spread to the US, the UK, Canada, and others. Yes, the Ponzi scheme is falling apart. Can you see that? Because I see it loud and clear. And much as we want to think, oh, the dollar can never go away, the dollar has gone away. I show you the purchasing power chart all the time. But you know what? I have in here, this is a U.S. Confederate bill. Gone. I can't use this to buy anything. I probably didn't even spend $5 on it because I don't spend a lot of even fiat money on this. So, gone away. It's a U.S. bill. I've got state bills here. Here, gone. This is a U.S. money currency. Used to be. Not anymore. This is a U.S. currency. This gold certificate. Can't use that anymore. I hope you see my point, which is that all these different things that governments will do and central bankers will do to lie to you, that is their job. They lie, and then they lie some more. What you're seeing in the gold and the silver markets, and I'm not talking about spot, I'm talking about the physical markets, that's the truth. 33 different areas between government agencies, manufacturing, industrial, collectible, etc. 33, and not an exclusive list, users of gold. 36 users of silver. Silver gets used up, doesn't it? Huge, huge, huge demand in silver. Silver is the fuse. It moves first. Gold, indestructible. It is the anchor. You need both. And even at these lofty appearing, seeming lofty fiat money prices, this is not gold and silver going up. And that's really what I'm trying to tell you. It's really about the breakdown in the current fiat currency and money system. Where do you want to be when we lose all choices? Because I want to make sure that I have surety, food, water, energy, security, barterability, wealth preservation, community, and shelter. And now I'll start with questions. So so this is from Facebook, David Crowther. What's your thoughts of depositing silver into a reputable bank as collateral in exchange for cash? So I'm thinking that you're asking me about borrowing against your sound money. And why would you want to do that? Now, it might be preferable to liquidating it, so I can see some reasons why you might want to do that if you have a big need of cash. But I can tell you that this is my personal savings account, right? If I really needed cash, I would liquidate it, because if you can't pay that off, then you're going to lose the silver or whatever you're using anyway. So it kind of depends on why you would do it as to whether or not it makes sense to do, because it could make some sense to hold on to it and borrow against it, but that's not really the way you want to have most of your holdings. That's a big problem that they have on Wall Street, because most of this stuff is done on margin, so they're borrowing to buy it. Works great as long as the system doesn't fall apart, but works horrible on the way down, and a lot of people lose their positions because of it. So, David, I would say if you give us a call and you talk through what you're really trying to accomplish, then we can help you see what all of your options could be, and then you make educated choices on what puts your best interest first. And Linking Atlas asks, should I buy 1 ounce of silver as I have around $120 at the moment, or wait as it may drop a little? Also, what's your opinion about copper? Any information coming up? Thank you. Yeah, absolutely. Go ahead and buy silver. And remember, because it's retaining its value while the currency is losing the value. And I'd also like to point out that gold and silver in any form is monetary at its base. So there's a whole bunch of ways that you can actually accumulate. And there's some more questions I sort of glanced with what the wholesalers are doing and what have you. So I'll come back to this again as I get to that question. Copper is not a monetary metal. It is an industrial metal, and it's based upon what's happening in the economy. So it's still a supply and demand market. With copper, since my personal focus is on currency life cycles, I stick with gold and silver. It doesn't mean that I don't own some things that are copper, and it doesn't mean that I don't own some platinum, actually. Yep, I got platinum in this piece, and I got platinum in this piece. But there was a time when I actually did own platinum coins, but that's gone a long time ago. So because I think that what we're going into is a hyperinflationary depression, that would not be good for the global economy. I'm not positioning into copper, but I will bring some of the copper data up because I get a lot of questions about that. Pre-1982 pennies are 95% copper. Go to the banks, get rolls of pennies, go through them. You will probably find a bunch of copper in there. That's a great way to accumulate it, but I don't think I would put a lot of new money in it for what I see. I know all the talk is how great everything is. That's not what the bond market is telling us. The bond market is telling us just the opposite. That's also not what the spiking spot gold and silver prices are telling us. They're telling us that the system is falling apart. Those two things are critically telling us that, the economy's not doing so great. So, I don't really accumulate copper. I really stick mostly and paying most of my attention, frankly, to what's happening with the monetary metals. And this is from Jason Kerr in Facebook. Problem with gold for the normal citizen is good question. How do we know it's real gold? Well, we've done videos, and maybe Josh, you can put the link to how to tell, but also a really easy way. Do I have it in here? Maybe not. But gold and silver are non-magnetic. So if you keep a nice heavy magnet in your wallet or in your pants or wallet or wherever, you can always test it. And if it's non-magnetic, then that at least eliminates the ability or the probability that it's fake. But there are a number of different tests that you can go through. I mean, personally, I like to just work with a reputable dealer because we're working with wholesalers that are mint direct and they authenticate and guarantee that everything is what they say that it is. But if you're out and about, just keeping a magnet with you and just testing, and also remember too, this old stuff, it will be marked somewhere on here, sterling, which means it's 92.5% pure. But, and it can be in any form. I mean, I have picture frames. I've shown you teapots, and this is a little salt and pepper shaker. So there's all different ways. And so look for that marking of either sterling or 925. If it's marked 925, that's Mexican silver, and it also is 92.5% pure. So it puts you in a really good position to know. So I would say work with a reputable dealer and keep a magnet. And there are ping tests and different things that you can go in and look. We've done a whole video on that. And Nancy Schultz says, hello, Lynette, and thank you so much for your kind heart and extreme knowledge you share with us. And thank you for being here because you're sharing your time, which is the single most valuable thing that you have. So, wanted to let you know I purchased 10 of your, have a paradigm shift card printed off the sound money. Yay! Thank you so much because you're the army. If you're a client, you get the first one free and the rest of them are at our cost because you got to hold sound money in your hand to start to understand what it really is. Thank you so much for that, Nancy. I really appreciate it a lot. The whole world appreciates it. This is how we work together to get sound money back in the system. Thank you for that. And Gascon Hart says, and this is, okay. Hi, Lynette. Great show as always. Thank you so much. Please say hi to my elderly mom who had surgery recently and is recovering at the hospital in Uruguay. She is the one who taught me to save in gold. Her name is Adela. Adela, I would love to say hello to you. And I'm getting chills because I miss my mom so much every single day I talk to her. Thank you so much for your wisdom. And I hope that you recover well and quickly. And I really do. I'm very happy to not just say hello, but to send all of my wishes to you. And Tony Wilkes from Facebook asks, what's a counterparty risk? And that's a great question. Now, gold, you hear me say this all the time, and the Bank for International Settlements, which is the central banker's central bank, biggest bank in the world, says that gold is the only financial asset that runs no counterparty risk. Everything else is a contract, right? Now, contract is all about counterparty risk because I'm agreeing to this and whoever is on the other side of that contract is agreeing to that. So when we're talking about in terms of, let's say, money, okay, or currency is more accurate. So the counterparty to this $1 million Bolivar bill is the government's ability to grow more debt. This currency does not even exist as currency. I can't even go and buy an empanada or anything else with this. So the government, the central bank, is the counterparty to this agreement, and they are blowing it. So counterparty is the other entity, whoever that may be. It can be an insurance policy, right? How many times I hear, but it's guaranteed. Look on your policy. It will say over and over and over and over and over again, based upon the claims paying ability. So that's what counterparty risk is. It's not you. You have to live up to your side of the bargain, or you do live up to your side of the bargain. It's who the entity that's on the other side of that bargain. For currencies, it's the government that is supported by the full faith and credit of the government, and that's what's in test right now. And if, by the way, let me say this, if I explain something and you still don't get it, that is not on you, that's on me. My job is to explain this in a way that you can understand it. And so if I've not been successful, please let Josh know, he'll let me know, and I'll try and explain it a different way. As I know, counterparty is kind of hard. You don't really think about this having counterparty risk because, gosh, you work for it, you try to save it, you try to invest it, you want it to hold its purchasing power. But the counterparties, the guys that create this stuff, all it is corporate debt. They know it's not going to hold its purchasing power. They know that the more of it that they print, the less value everything out there has. So that's counterparty risk. It's whoever is on the other side of that contract, them fulfilling their obligation to you. And governments and central banks fail miserably at it. But gold and silver does not. It maintains your ability to purchase for silver the same goods and services over time. And then for gold, it's expanded beyond that. But these are the only things that run zero counterparty risk. What could create a little bit of counterparty risk in silver, although it's not really counterparty risk, is the fact that it gets used up and gold is recoverable. So I think that's why the biz said that gold is the only financial asset that does not run any counterparty risk. You hold it, you own it outright. And Jeannie Young 6900 asks, why are some coin shops not buying coins back? Because what happens is quite a phenomenon. And I've had a number of people say, well, they're not buying junk silver, smelters, et cetera, et cetera. So let's just address all of that right now. Some coin shops are not buying coins back because as the spot markets rise, people not really understanding what's happening are naive enough to liquidate their gold and silver to capture, in this country, dollars. And so if there's a lot that goes in there and it's just like a mom and pop shop, they have to take it in and then they also have to liquidate it, and they may just not have enough deep pockets to continue to do that. So I can't really speak directly to it. Whereas a company like Zang Enterprises, we have wholesalers set up. So we have a bigger network of buyers. Having said that, when you're looking at the supply and demand dynamics, that there are definitely some smelters and some coin shops that don't want to buy junk silver, right? What does that do? That's really an opportunity for those of us in the know, because what that would do is push the premiums down, and so you can buy it much better. And you might remember, because I've done this so many times, where my Uncle Al, when he was teaching me back in the day how hard assets move, they go from undervaluation to fair valuation to overvaluation to fair valuation to under, in this constant loop, right? So in this, I would say on both gold and silver, we're not even marginally at fair value yet. But if it holds the premium down and you can buy it better, I personally love junk silver. It's 90% silver, dimes, quarters, half dollars. See, you love junk silver too? That's Juliet, for those that don't know her. She's my baby. But I love gold and silver. Good crush those premiums. That's not true in every area, but crush those premiums and take advantage of it. Because what you know that those people that are selling don't know, that it isn't even near its fundamental value yet. And I can't give you a lot of guarantees. I can guarantee you I will show up and I will do the work. And I can also guarantee you that at some point, all assets, all instruments go to their true fundamental value. For this stuff, that number is 0. Look on the purchasing power charts at the Fed. You will see it says 0, and we're only 3 cents away. So we're very close to that, and that's official. It's probably much worse than that. But for gold and for silver, we aren't even close to 50% there yet. We're at like maybe 20%. So you take advantage of the naivete of most people. And that's why they're not they don't have deep enough pockets. And also, you know, do you think that look, this stuff should be taught in grade school. But if it was taught in grade school, then you and I would go, no, not doing it. People would not work for it, so they have to hide this from it. The spiking gold and silver prices are really showing you the truth. The spiking bond yields are showing you the truth. The system is falling apart. You accumulate as quickly as possible. And if others are foolish enough to liquidate, you take advantage of that. I'm sorry, but it's just a fact. Because if you do that, then you can help other people. It's like putting your oxygen mask on first before you help your neighbor. Because if you pass out, you can do nothing. So if you lose all your wealth, you can do nothing. And this is Jason Collier from Facebook asks, what do you think of Goldbacks? Could you do a YouTube video on them, please? In my opinion, it's the best way to carry small amounts of gold. And I would agree with you. And yep, Zang Enterprises does indeed carry Goldbacks. Here's a $1, where is this from? Which state is this from? I don't know. I can't see it. Anyway, yes, I do like, I wouldn't put everything into Goldbacks, but you know, part of the strategy is that very first part. When the world is shocked and the public is shocked, then what you need for your first line of defense is the stinky old cash that's losing all of its purchasing power. Why? Because that's most recognized. But in that, and there's a certain amount of cash that you should have. It's called cash in the wild because it won't have the chips in it yet, hopefully. But then in that cash position, quite honestly, that's where I can see a certain level of Goldbacks being. So you would have your cash, you would have your Goldbacks, and you could also even have some digital gold like Glint or like Kinesis, digital gold, and it's for that first part of immediate liquidity that you need it as the world is shocked by what's happening. Then you go up a piece to your barterable gold and your barterable silver position. And we can sit down and calculate out how much gold do I need for all these functions like property taxes. If you have, I hope nobody does, but obviously people do have chronic illnesses, those kinds of things. We're going to take a look at that. And then how much silver do you need to go out and buy that gallon of gas or strawberries or what have you? And we can calculate all of that out because we have it broken down into what is the gold or the silver that supports this particular function. But it always has to start with your goals, period. Always. Because that's the only way that you have the right tool for the job. You know, a lot of people they'll just accumulate. And look, accumulating something, some gold and some silver is certainly better than not, right? But does it support what you're trying to accomplish? And how much do I need? You can never have too much, but That's basically, so yes, I do agree with you, Jason. I like Goldbacks for a portion of the cash position in the overall strategy. And we probably will do an introduction to them, but like this has 1/1000th of an ounce of gold inside of it. So you could actually burn this up and end up with the gold because gold is indestructible. I don't know that I could do a whole video on it, but certainly I do. I like them for a certain amount of the function, not for all the portfolio. They're too expensive for that, and they're not widely enough. There's not widely enough acceptance just yet. That doesn't really make me change my mind on them. So, yep, I agree. I like them for part of the cash position of the portfolio. And this is from Instagram. Glenn B. Newport asks, what do I think about mining stocks? Well, when you have a mining stock, it's still a stock. So it's going to go the way of the rest of the stocks. It's not like you don't own the gold underneath it. So while I appreciate the job of the miners, I also know that after 2008, the single biggest risk, according to Ernst & Young, the single biggest risk for miners was nationalization. And if you take a look at what's happening in a number of places in Africa, that's just another way to say confiscation, because they are forced to sell to the government in the local currency that's being hyperinflated away, 20% or some percentage of the gold that they bring out of the ground. So miners run an additional risk, especially inside of where we are at the moment in the trend cycle. And governments do nationalize. They do take it over. That is a form of confiscation. So is inflation. It's a form of confiscation, taxation. So I personally, and you have to do what you're comfortable with. So if you are going to lay in, or you do have whatever stocks, mining stocks, whatever they are, tech stocks, take your pick. Just make sure that you're appropriately diversified, which we'll check for on whatever your fiat money, your intangible holdings are. Then you can properly diversified to have the right amount of gold. So if this goes away over here, bam, you're covered. It doesn't matter. It's one of those, what if I'm right and what if I'm wrong? If you do something where it does not matter whether you're right or wrong, to me, that's just the right place to be. And let's see. Oh, this is from Facebook, and it's Donna Hill. Is the reported $600 markup of precious metals on a 1099B true? Well, no. No. Yeah, I'm not really sure what you're asking me, Donna, but there is no $600. Now, there is a markup. Obviously, we have to stay in business, and this is the way that I can come to you and do all of the work and go out and fight to get sound money back in the system again. And we reveal everything. So I can't say that that's true, but if you call us and you talk to one of our strategy specialists and you're looking at whatever it is that you're doing, we reveal all of the fees, everything. But you should also know that inside of the strategy, it's set up as a full circle. So whatever taxes, whatever fees, whatever losses, whatever that is, we want to make sure that you're whole at the end of this entire cycle. And so we take a look at that and we offset, like your great example is this first part, your barterable strategy, right? That is designed for you actually to use up. But if you use up all your principal, then you have nothing to work with. So that's pretty significant. And so as part of the strategy, you're going to be recouping all of those. I hope that makes sense. So I wish I could really kind of answer that. And if you have like a hard copy of something, you can send it to hello@LynetteZang.com, and in the search bar or in the subject bar, you can say that I asked for it on the live, and then they'll send it to me. And then I can be more educated in my answer to you, Donna. I'm just not looking at it, and there's nothing that's standardized $600 markup. So, but I'll answer the question if I can. And Michael Archangel 01 asked, but many dealers have stopped buying that 90% silver. I wonder if the same will happen to pre-33 gold. Please make a video about how and where to sell these coins if the spot prices go crazy high. Love your videos, by the way, and thanks. It is my pleasure. And as we said, that's the time to take advantage of it, because what it's doing when they're looking at gold and silver, they're looking at, like all of this. Remember, I always say gold and silver in any form is monetary at its base, right? And so people that really don't understand what's happening to the currency system, they're naive. They see the price going up. This is how they do a confiscation and don't get a lot of pushback. They'll pay a premium, right? Don't believe the lie. It's just a lie. So, we haven't stopped buying back junk silver. But then again, the way we're positioned, and when you're talking about the pre-33s, yup, our strategy, there is how to build your holdings to begin with. That's based upon your goals. But we also have exit strategies at different times as we go through this cycle. So for example, and we're always going to buy it back because of the way we have specifically structured it. And I can't obviously guarantee it. If everybody goes out of business, I'm not going to be able to do that. However, the likelihood of that is frankly nil. Having said that, the way that we're structured is we have those funds behind us, so it's not a problem. And there will come a point, if you have, say, fixed rate debt, that you're going to be liquidating these pre-33s to pay off that fixed rate debt. And we've already have been working on building that infrastructure, because we're going to have to do it in a very timed and planned way, which means we're going to need a lot of cooperation. But we intend to buy them back from you, and so do our wholesalers. And when I came here, I said, what if they don't get it from us, but they got it from other dealers? And they'll buy those back too. So we have the exit strategy in place, not fully in place yet, honestly, but we have the foundation of it in place as you and I are sitting here, and it's not a problem. I don't anticipate it being a problem. Maybe that's a better way to say that. And I will do a video on how and where to sell the coins and gold and silver. I do have that on my docket. I don't really have it translated yet onto a PowerPoint, because there's just other things that are a little more important. But yes, I will get that done, as well as all the fundamental values of everything, et cetera, because we actually want you to understand the strategy. It's not rocket science. It's logical, and it's based upon the repeatable patterns in history. And so even, when you look at the other countries where gold and silver has gone through those overnight resets, not all wealth disappears. Generally, 80% of the population ends up in abject poverty. In some places like Venezuela, Zimbabwe, that number is 90%. But I didn't say 100%, did I? And in this K-shaped economy, well, when we go through this crisis, which is what the Japanese, what the global bond markets are screaming about right now, even as volatility is suppressed, it's so interesting. These guys are evil genius, I'm telling you, just evil genius. But yeah, there's always a buyer, especially once people understand how quickly this is losing its purchasing power value. And I do believe, and I've said this for a while with the spike of the monetary velocity, that we're already in the early stages of hyperinflation. It's just not visible to the public yet. But I have a feeling it will be visible pretty soon. And be in the zone 76 or 3776. Happy Tuesday, Lynette. Happy Tuesday to you. I have 2 questions for you today. When the time comes to take profit from our metals, what do you think of taking a loan from our physical metals instead of selling it? That's a very good question. And I think it depends, right? It depends. Because once you have debt, then you have interest on that debt. So what I will say is, you know, though I've developed this strategy based upon all of my research that I've done since 1987, I have modified the strategy over the years as things have shifted. Like, for example, I used to think that once we went through this whole episode and we had the new currency that actually has a component of gold in it, and they will bring that component of gold back in, that I would convert a big chunk of my holdings, not my legacy holdings. My legacy holdings are those coins that are very, very rare that I want passed down from generation to generation to generation. And I cross my fingers because I won't be able to control that when I'm not here. So hopefully I will also leave a lot of education so that they're smart about it. But I would have converted most of the rest of it into the new currency once it was stabilized, etc. And I will be to convert into income producing assets, though that kind of happens before we get to that point. However, once I saw that the direction that we were going in was a full surveillance currency, that I had to change the strategy so that what instead we will do, because that makes it, they're talking about negative rates, etc. So, you know, when you get all the purchasing power out of a currency, what do you have to do? You have to attack principal because that's what you have left. And that's what the negative rates are about. And that's what we're going to be experiencing. That's what they've talked about. So rather than converting a chunk of it, I will convert it not daily as I need it, but maybe quarterly or maybe monthly or something like that as I need it, because once I know the full erosion, once you know that, then you're not going to want to do any more than you absolutely have to until we're in a more stable currency. If we are successful in getting redeemable gold back in the system again, I will change my mind again. But we'll watch the whole evolution, because what they have in mind for us is full surveillance and full control. And we better do something about that, unless you think that they have your best interest at heart. And I haven't seen anything that would tell me that. And do you have a video talking about how to recoup the money that we will incur on taxes when we sell our physical metals? Didn't I just do something? I think we just recorded something on that. We haven't put it out yet, frankly, because I'm preparing to, for the going to Australia the end of March. So we do have, I don't think we've put it out, and it might not have said exactly the recouping, but I feel like we just recorded that. Did you think so? I'm telling you, it all blends together. I'm sorry. Like constant. Somebody asked earlier if I would do these lives on a weekend or on Friday. But the way that I work is that Fridays is like probably my single most important day because that's when I really dig in and load my brain and do tons of research. And then Saturday and Sunday is when I put all of the materials that you see together. So I don't have anybody else doing that with me or for me. Hopefully that the with me part will change at some point in the future. We're working on it. Well, we'll see. So I can't really give up a weekend, to do that. But if I know you want something, then I will try and put it in my rotation to create it. So I don't even remember what we were talking about. I really went in the weeds on that one. I'm sorry. Do I have a video? I do believe that we just recorded a video that would show me that. But, and I know that I'm doing a series of videos for clients that will certainly go into that and lots of other things. So have a little patience. I'm pretty sure I just did one. I don't know when it'll be released, but if you watch, you'll see it. And Larry Peckham, D6s, asked, in your confiscation piece, please include discussion for metals outside U.S. jurisdiction. Absolutely. Can you copy that for me? Sure will. Thank you. And Miramore asks, can we use gold jewelry to take part in using the first reset to pay off debts? Yup. And if so, what is the best way to do that? I'm working on that too. I'm not quite ready, but I have a surprise for you. So if you keep that, if you just kind of put a pin in that for just a little minute, I'm actually way further along than I have ever been in this. So the answer is yes, and I will be showing you that ASAP. Not exactly sure when yet, but ASAP, yes. And Michael Thomas, 9462, asks, hey, my name is Michael. Do you think I trading silver for gold as a good idea? I don't have much silver. I have about 100 ounces of silver. Okay, so first of all, Michael, it kind of depends, but I would think not, because you can perform really all of the, well, almost all of the functions with gold. Not all of them, but almost all of them that you can do with gold, you can do with silver. The difference is in the quantity that you would have to do it. And at that point, you've really already paid your fees on the silver. I mean, I'd say call us so we can calculate out what you need. But with 100 ounces of silver, I'm thinking that you probably should not do that ratio trade. However, I could be wrong because it's just, I can't really make a blanket statement. We can get specific with you, and then you can make choices that support your goals. But at that level, more than likely, sit on the silver, continue to accumulate, and then when you can, because gold and silver in any form is monetary at its base, look around. It doesn't matter if it's broken or bent or tarnished or anything, it's still monetary at its base. And so there are really affordable ways to accumulate both gold and silver. And I would also say this, develop your local community. If you walk away from here with one good idea from today, that would be the one that I would encourage. I always had community in my mantra, but it wasn't until I went to Australia in September of 2023 that I began to understand the real importance of that community piece. Locally, because I've been working on preparing since 2008, since the system died. And yes, I was buying gold and silver long before that, but I'm talking about the food, water, energy, the rest of those parts. I wasn't really too concerned or thinking about them at all. But when 2008 hit, I absolutely knew that that was the end of the system. We don't have that same luxury of time that I'd had since 2008. We just don't have it. So that's why community becomes that much more important, because maybe you have silver, maybe you don't have any metals at all, but you can lay irrigation. You know how to grow a tomato. You can put a roof on a chicken yard or something. Lay irrigation, some kind of foundation, something. Because in the list of people that will be bugging out with me to my bug out, we have plumbers, we have carpenters, we have farmers, we have doctors, we have teachers. It takes a village. So create that community. And that way, like I have lots of gold and silver, so maybe you don't have any, but you have those skill sets that I need. What are you bartering with but what your skill sets and your talents are? It's the same thing I barter with. It's the same thing we all barter with. So hone those. Go to a farmer's market, meet the people that grow your food, give them a day's worth of labor. You'll learn some skills. You'll create a relationship. And don't wait. People procrastinate. They think they have time, until that time is gone. And I can't tell you even 1 second before it's going to happen. So please create that local community to create surety in those things that you can't live without: food, water, energy. And Neo the Wise asks, is Greenland, Venezuela, and others an attempt to continue the dollar dominance by capturing the reserves to create the rare earth mineral REM dollars? Coined here first. Good job, REM dollars. Can it work? Greenland, Venezuela, what we're really experiencing here is probably more truth than we've had before, because they want us to think that everything is by the rule of law, but it really isn't. Winners and losers are chosen. So what's really happening, President Trump is a change agent. That was his job in 2018, and it's 100% true today. And he came in and he made big, huge changes to the U.S. government and forced changes everywhere else in the world. And he is brave enough to not give a crap about what anybody else thinks, but do what it is that he thinks is the right thing to do. I know I'm not really answering this question very well. I don't think that it's about capturing the reserves to create the rare earth mineral, the REM dollar, because China's so far ahead of anywhere else in the world that if they created a REM dollar, that would be more beneficial to China than it would be to the U.S. I think that it is more a shifting of lines. And think about what Venezuela brings to the table with their oil, as well as their other natural resources like gold and rare earth, etc. We have a lot of rare earth in the U.S., but it hasn't been mined for a bunch of different reasons on that. So Venezuela having the greatest oil reserves, and China buying a lot of their oil from Venezuela, by President Trump taking over the oil industry in Venezuela, was now starting to do, I was reading a little bit of pushback this morning, so it'll be interesting to see what happens. But I think that is more about controlling the natural resources, but not just necessarily creating a rare earth dollar. I don't think it's probable. I'm not even sure that it's possible, because China, that would just benefit China. It wouldn't benefit the U.S. But cutting off some of the supplies to China, cutting off maybe their dominance in Greenland and the polar ice caps and things like that, that is about the U.S. keeping more control. The dollar dominance are trying to do it through stable coins that are not really stable. You know, you always have to be careful of how things are named because it's typically the opposite. Can it work? No, it can't work because of China's dominance in rare earth. But I totally agree with bringing manufacturing back. I mean, we see the lie that the supply chain breakdown revealed. So there are some things that, you know, it's just interesting. But can you see we're not in Kansas anymore? And we're not going back to Kansas no matter what happens. We're not going back to Kansas. We are somewhere over the rainbow. We have not yet crashed down. But I want the ballast of physical gold and silver in my hand to protect the fall and to actually create opportunities. So I don't know if I answered that well, but sorry. And George Palmer, 4506, asks, what is the average of gold, silver versus silver value above ground as of last year value as in usable supply? Actually, I have that. Why don't you grab that? Because that's something that I could put together very easily and show you guys next week. Just make sure I know that I said I would show them next week. So I will definitely show you that next week. And that's a great question, and I'm so glad you asked. And Jason U. Warrington, the C5303. Theoretically, with the backwardation that we're seeing in the market, is it possible for silver to not just outperform, but outpace and outprice gold? No more living in the shadow of its big brother. Well, we're seeing backwardation in both of those markets, and silver typically will move first. That's the fuse. If you're talking about, do I think silver's going to go above the price of gold? I mean, anything is possible, especially since silver is a diminishing asset. Gold is not. But here's the thing. Gold as the anchor is the tool at which governments revalue their currencies when they attempt to get public confidence back. They don't really do it against silver. I do know that some things are shifting in that market, but silver is, I don't know. I guess we'll see. But you got to have both of them anyway. I don't think so. I don't think historically that would not be an accurate statement ever. And historically, what I've seen is, again, that silver to gold ratio growing more narrow for a while. And then once the hyperinflation really kicks in, then you see it shifting again. Like I showed you, I guess, last week, or have we even aired that video? But I recently showed you that. I don't know. He just asked me which one. I'm telling you, I'm just like, we're constantly going, and that's okay. But we did just do a video, and it will show you that. And I actually have one that's slated historical, so we'll come back to that question, but that would not be historically accurate. And I'll show you that because I did pull that up. I do have that on my radar already. And GSD Puppies 3230, great video. Thank you. Really looking forward to your study on silver confiscation. I'm working on it. And Infinite Human says, LZ comment. Yes, gold-silver ratio was started as a trade, but it's also a way to price silver or price gold in the value of its counterpart. Yep. IMHO, it's worth tracking. It is worth tracking. I just don't put as much store into it because I'm not going to be trading out or trading back and forth. But I agree. You're absolutely right, Infinite Human. You are absolutely right. And what's that skip says, can you do a video, please, on what happens to interest rates in a reset and what we can do now? Sure. I mean, you're kind of seeing what's happening to interest rates in a reset because really, simply put, they go through the moon to the moon on a Lorna Doone. They go to the moon on a Lorna Doone because interest rates are supposed to reflect the value of the money and the confidence. The interest rates are about paying you for that risk, for taking that risk. So as the currencies fall apart, like we're seeing right now in the long end, when the currencies fall apart, that means the markets are losing confidence. So they are demanding more and more and more and more and more interest to take that risk. That's exactly what happens. They go through the roof. What can you do now? Number one, get out of variable rate debt. That'll kill you. You're never getting out of that. But in our sound money strategy, we actually utilize exactly the same strategy as the governments do about repaying that debt with dollars that have less and less and less and ultimately no value at all. So for any of your fixed rate debt, you don't have to pay that down. Just to make sure that you have enough gold and or silver, whatever you want, on the other side. Well, you're not going to be able to do it with silver. History wouldn't tell us that. You want to make sure that you have enough gold set aside so that when they do that overnight revaluation, that, my friends, the first one, is where we will be paying off that debt. But what might take 10 ounces right now? Oh, that's right. That's where we did it. We just did a video, so we haven't released this yet. I remember it's where I'm showing you how you can pay off a mortgage, but this would be true for all fixed rate debt with gold. So that's where you will see the difference in what I'm talking about right now. That has not yet been released. But that's why I'm going, it seems to me like we just did that. Yeah, we did. That would be in that video as well, where you will see what happens to really how you pay off your mortgage and what happens to interest rates and what happens to the metals and all of that. So that's coming up. And what you can do right now is call us so that we can make sure that your strategy is in place and then you get it executed. And also go back into that community piece, right? To create the surety and all the rest of the mantra areas. And Thor 7005 says, Bald Guy Money says 4 things always happen before metals top out. Number 1, interest rate cuts. Number 2, a crash in the gold and silver ratio to 32 to 40, so 1 to 1. And 3, a 30 to 40% drop in the DIXY. And 4, a major market event. Thoughts? You know what? I think, Thor, I will take this and I will do something on it so we can see for ourselves if that's true. Now, we did see that back in 2011, we saw a major dip in the gold to silver ratio. Interest rates were, but they were already cut before that. And the thing with the DIXY, yeah, you know what? Take a copy of that, and I'll just put it on there, and we'll take a look. We'll take a look together. And Ma Cop, except everyone is forgetting, gold can be confiscated. Bitcoin cannot. Also, Bitcoin will be used to easily transfer, move all the future large amounts of money from bank to bank. Well, I'm glad that you're a mock-up, and you certainly seem to know a lot of things that maybe I don't. But the reality is as Woods over at Jefferies just came out and said, sell Bitcoin, buy gold. Why? Because quantum computing can break down all of those results or all the cryptography. So it is not as private and safe as you want. And oh, by the way, governments can and do shut down the internet. And oh, by the way, now you might be, and so I would take your word on this above mine for sure, because I am not an engineer, nor am I a specific kind of engineer that understands and writes code. So maybe you do, but there's been a lot of Bitcoin that's been stolen. I've seen the government take Bitcoin back. You have to reveal all of your information when you buy it. It's just not as private as you would think. And by the way, Mock-Hop, did you read the 1996 NSA white paper on how to create a mint? Is it possible that Bitcoin is a Trojan horse to get you used to and comfortable into these digital assets that can then convert into a full surveillance currency? Is that a possibility? Because I see that as a possibility. And I see governments can do any darn thing they want. So if they want to confiscate your Bitcoin, wait a minute. Hold on. Didn't President Trump start a Bitcoin sovereign fund or something like that from all the Bitcoin that they confiscated? So much as they want you to think that this is digital gold, it's intangible. Bitcoin doesn't have a body, but yet they made the visible representation look like this so that you would think that it's gold. And I agree with you. Gold can, and certainly has been, in this country 5 times, been confiscated. That, my friend, is why I only do pre-1933, because those are in a different classification. And wait a minute, you can hold Bitcoin in an IRA, can't you? You can't hold this in an IRA. So you might want to rethink your logic a little bit, because it's just not true. And as far as the ability to easily transfer and move, I can hold many millions of dollars in a coin just this size. And I can go anywhere in the world with this because the collectible market is a global market. And I can liquidate it and have the same level of purchasing power wherever I go. So I do think that that is a good function to be able to have this on a what's that called? The sticks, the transfer sticks that they could put the Bitcoin on, those wallets, the wallets, right? And you can put it in your pocket and you can go anywhere in the world with it. And I think that is a very valuable function. But again, I'll remind you of what the Bank of International Settlements has told us, that gold is the only financial asset that runs no counterparty risk. You hold it, you own it outright. But you've got to do what you want to do. And even if that's the direction that you're going in, why in the world would you not properly diversify? Because in yours, you better be right. Because otherwise, all it is hopium. That's what I read there. It's hopium. The test will come. So far, it looks like they're not passing the test. We'll see. And Yulia 4310, hi Lynette, what is your estimation of how many years this trend will continue and what price gold and silver will reach in this bull market? There are no resistance levels for silver and gold. You're absolutely right, Yulia. There are no resistance levels for silver and gold. And in terms of dollars, right, we are at all-time high levels. But isn't it also true that the dollar is at all-time low levels in terms of purchasing power? So How many years? I've got to say that with the breakdown that's happening now, we need a really huge crisis. That could happen if they cannot get these the spikes in the long bond markets under control, then it could be sooner than any of us think possible, to be perfectly honest with you, because everything is so darn fragile. It's just built on this massive layer of debt. And that debt is imploding with the spiking of the interest rates. So, there's not any doubt in my mind that there are key structural shifts that are happening in this market. I'm hoping that we have maybe another year or so for the hyperinflation to become apparent to the public. I don't know that that's the case because they want to print and just print and print and print. I wish that would happen to them, but just print and print and print. Oh, Juliet's going, what is all that stuff falling on me? And that will make, what I can tell you, Julia, is watch the confidence markers at the Federal Reserve, because that's really going to tell us on timing. When the confidence levels break below the lowest levels ever, then I would really say from that point on, we probably would have 6 months to a year on the outside of when that hyperinflation becomes really noticeable and we have that great financial crisis, which, see, here's the challenge, right? It's actually unfolding in Japan right now, right as we're sitting, and it's spreading to the rest of the world. That is happening right this second. But this is not the first threat to the yen carry trade. So I think so much of it is dependent upon, can they put that genie back in the bottle for another minute or two? And I'm not really sure that they can. So I would say that, it could be pretty obvious by the end of this year with inflation really spiking at a huge amount. Officially, hyperinflation is 50%. And I really wish I could say something different, but it would not surprise me to see them lose control of this breakdown, because that's what's happening with the spiking spot prices. They're losing control. Otherwise, why in the world isn't spot gold still like $258 or $48 an ounce like it was when I first started? They can create an unlimited amount of it. What? Do you want to say something? Thank you so much for everybody being here. That's my girl. There are no resistance levels for gold and silver, and what the price would be. In that video that I just told you on how to pay off your mortgage with gold, I go over the fundamental value of both gold and silver, and I do it on a global basis, and I do it just in the U.S. as well. If I remember correctly, because there were some more gold that they found, what have you, I think those numbers were, don't hold me to this, but it's in hard copy, so when we air it, you'll see it. But I'm pretty sure it was about 38,000 at the moment that I did it on the true fundamental value of an ounce of gold, and about 1,800 on a true fundamental ounce of silver. However, the more of this stuff that they do, the higher those numbers go. And so, like if you look in Venezuela, their first overnight reset went up 3,500% because they push down and suppress the price of gold and silver so that you don't understand what's happening. But once all of that confidence is lost and they have to regain your confidence, that's how they do it. They revalue something that has absolutely no intrinsic value, and it's used in one place, and it costs nothing to create. They revalue that against sound money gold, the primary currency metal. Do not lose sight of that. This is the primary currency metal. This is what the central bankers accumulate because they take this that is all intrinsic value being used in every sector of the global economy, 33 places that I could count myself, and they take this one place and they do that overnight revaluation. So I can tell you what it is now. It's hard for me to know what it will be then because it's based on how much new money gets printed on a global basis. But if you look around and you listen, what's going on in the Japanese bond market? They want to create inflation. They want to stimulate the economy by devaluing the currency. That's what's happening. That's what's happening here. That's what's happening everywhere. This is a global issue. We have to come together globally and demand sound money back in the system again. So there are no systems, right. I mean, I can't tell you what that number is going to be because these dollars have absolutely no value. It's like my $10 trillion Zimbabwe note, wherever that happens to be. You know, I'm a trillion, here it is. I'm a trillionaire in Zimbabwe, but I can't buy anything with this. Right? So it doesn't matter. Don't get blinded by numbers. What gold and silver do, especially gold, is it holds your purchasing power intact because it's all supply and demand. And that's what we're seeing also in the spot markets. And Linking Atlas asks, question, so you're also saying that investing in the stock market is also quite risky? Well, I'm an ex-stockbroker. I consider myself a technician. I know how to read charts, and I don't own any stock. So, yep. And if you do own stock, what can you sell that back for? Dollars. I mean, this happens to be a bolivar. But you know what the difference is between this and this? This monopoly money? Absolutely nothing. There's no difference between the two of them anymore. You know what the difference is between this and, I'll use a $100 bill. You know what the difference is between this and this? You agree to work for this and use it as your tool of barter and try to save it and try to invest it. You don't do that with that. That's the only difference. So yes, I am saying investing in the stock market is extraordinarily risky. And if you think that gold and silver, and they are technically severely overbought, right? Which doesn't mean overvalued. It just means look at how fast it's going up, right? So severely overbought, but so is the stock market. And that's something that melt up, and I believe we're in the melt up phase, just like I showed you on that chart. Because people will run to the stock market thinking that they can outpace that inflation. But if all you can do is convert it back into dollars, what did that get you? Nothing. Absolutely nothing. So yes, I am saying the stock market is quite risky and I don't own any stocks. That has certainly not always been true. And I expect that in the future that will not always be true. But at this point in time, not a one. And Carrie McGee, 4564. Hi, Lynette. Do we have any gaps in the gold and silver charts we need to fill? Actually, we do. I saw a small gap, actually, that would need to come down and be filled. But remember, at some point, all those gaps will get filled. And just for those that don't know what I'm talking about, a gap is when spot gold or spot silver closes at this price, and then the next morning opens up higher or lower, right? And so stock markets are pretty regulated, right? So what that means is that the price action will have to move up or down to go and fill that gap, go to those price levels that they missed when it closed at one place and opened at the other. And I was looking at the charts, over the weekend, and I did notice, it wasn't a huge gap, but I did notice a gap. the thing about gaps is I can't tell you when they're going to get filled. At some point, they will be. But when? That's anybody's guess. And if you'd like, Carrie, and I'll put it down on my list, I'll pull them up in a form next week and we can go over the gaps because it's kind of important that you do that too. I'll do a gap. It won't be long. It won't be a long one, but I want to make sure that you understand that pattern. So yes, and I'll show you what that is. And Michael Roberts, 564, asks, Lynette, if you were put in charge of the Fed, wow, what would you change? I would change everything, but nobody would like me very much because you have to live within your means. So their job is really, I would not want a job at the Fed. I wouldn't, because their job is to rob you and keep it hidden. Their job is to regulate the rate and speed of inflation. It's garbage when they tell you that they're trying to fight it. Look, they know that this is what creates it. They know that. It's part of the plan. So if you put me in charge of the Fed, I would let the markets, the real markets, I would stop giving free money away to all of these corporations because that's ridiculous. Of course, the Fed is a private corporation and its job is to protect those other private corporations. But if we put that aside for a minute, because I never really thought about what I would do if I was head of the Fed, but I would definitely stop all of this money for free printing. And that means we would go into a severe recession. And I don't know if I would have more power in that position. But you know what? Because I would want to have redeemable gold back in the system again. But you see, here's the problem. As soon as you put gold backing a system, it fixes the debt where it is, and this debt is not payable. So how do you repay unpayable debt? You do it with currency that has no value so that you can reset into the next system. It's more, what would I do if I had control over what that next system looked like? Because then it would absolutely be with redeemable gold in there. But I would also probably do some redeemable silver as well. But I want the public. And the other thing, blockchain, there's good things and bad things about everything, right? Everything's a double-edged sword. Blockchain technology, there's a lot of benefits and good things that can come of that as far as keeping people safe and secure, but also voting. It can be used as a voting mechanism so that we don't need all of these politicians that are just skimming money for themselves. Why not let the public vote directly? Blockchain technology could do that, but I've never heard them talk about it. My friend Gerald Celente, this was not my idea. This was his idea, and I think it's absolutely brilliant. So I don't know what I would do if I were put in charge of the Fed, but I would change it. I want a fair and level playing field. So if I had the power, I would back our currency with redeemable gold. And Thor 7005 asks, Lynette, a few weeks ago you said you think there's a 3 to 5 years left based on the behavior of the central bank and government. What are you seeing that led you to this estimation? Really, the timing is the biggest challenge. But what I'm seeing in these government bond markets on a global basis means that I don't think we've got 3 to 5 years left, because the markets are telling me we don't have 3 to 5 years left. The markets are telling me that they have lost absolute confidence in the foundation of the financial system. So that's what's making me very, very nervous, and people don't realize that, but think about it. How is money created and supported in the system? the full faith and credit of the government. When interest rates are spiking, it's because the entities that buy that stuff have lost the confidence. And the higher the interest rates go, it's because more and more confidence is lost. And you're already drowning in debt. We're drowning in debt. That interest rate chart that I showed you from the US, the treasuries, that's exponential. If you think about it, whether it's a government, a corporation, or an individual, yes, governments can create new money at will, so they can stay looking solvent longer than you would imagine. You and I at this level, if we did what the governments did, we're under a bridge, right? That's the way it happens. But sooner or later, the corporations lose their edge, the governments lose their edge. That's why it's so critically important for you to become your own central banker and develop that community around you. That's why. So yeah, what really changed is looking at what's happening in these global government bond markets, because they can make as much of this crap as they want. But what that's really telling me is that that those that have been buying this government garbage don't want to buy it anymore. So that's what I'm seeing, and that's what's making me extraordinarily nervous. But you also have to remember, this isn't something that's new. They decided to pop the bond bubble in 22 when they started raising the interest rates, and they broke a 40-year trend. Now we're starting to see the results of that in a very pervasive way. And that's why I said, if they can calm down the rhetoric, if the central banks and governments can calm down the rhetoric, because when I look at the volatility indexes, they're really kind of a joke, right? So I know that plunge protection team everywhere in the world is in there doing their very best. But the fact that we're seeing gold and spot silver spike and long-term government debt spikes tells me they're losing that control. So that kind of speeds everything up. I don't know. Just get ready. Then it doesn't matter. Just get ready. Just get into position. What if I'm right? What if I'm wrong? I have my food, water, energy security, barterability, wealth preservation, community, and shelter. I sleep well at night. I don't worry about it. And Silverman 5707 asks, are copper, platinum, or palladium undervalued, or are their prices just raising, hanging on to silver and gold's coattails? Well, it's commodities, and really what's happening in here, and this started about a year ago, roughly a year ago, is that we are shifting from a paper trading price discovery to a physical price discovery. And that's going to be true with everything, not just gold and silver, but to your point, copper, nickel, palladium, whatever real assets there actually are. So in some ways, no, they're not just riding on the coattails. We're inside of a structural shift in price discovery. It's about time. It's about time. And Thor 7005 asks, Lynette, I've heard that the next metals to take off will be copper and then nickel. What are your thoughts on that? Well, those are industrial metals. So can they convince us that everything is hunky-dory and that the global economy is just humming along? So it depends on the supply and demand, and that is about darn time. It used to be supply and demand dynamics, but everything, all your food, all your energy, all your insurances, all your costs on everything is based upon the paper trading market. That's the other structural shift that we're in right now. We're in major structural shifts all over the place, whether it's the global alliances, the monetary systems, the markets, take your pick. That's why you got to be as independent and self-sufficient as possible, because even just one of those areas can take everything down, let alone all of them happening at the same time. But don't be blinded by numbers, I'd say that. So copper and nickel are industrial metals, and they can certainly go up based upon supply and demand, and those are the dynamics that you should be looking at if you're thinking about moving into those areas. For me, 100 bazillion %, there isn't even one teeny weeny doubt in my mind, but that this is the end of this fiat money system, and we are transitioning into a new system. Let's influence the new system. The old system, let it die. And if you are that independent and self-sufficient, you'll be okay through this transition. I'm not saying it's not scary, but if you're okay, that means you can help other people be okay. And we have to do that. We have to come together in community and help each other out, because that's when we're the strongest. Alone, we're not. Together, we can do anything. And Cryptonomics asks, not so sure currency is failing is the only reason for silver and gold spikes. No, it's the whole system. And it's also how long it's been suppressed. And Cryptonomics, if you have a thought on that, would you please share it with us? Because I do like to hear everybody's thoughts, even if I might disagree or whatever. That's okay. We're a community. We're not a cult. We like that. So what are some of the reasons that you think? That could be a good poll, right? On those polls, can you put it in where they can write in what they think too?
I don't know.
Or can it just be multiple choice? Okay, we'll see. That would be a great poll. I don't think he can put it together right this second, but let's get an opinion. And Alex John asks, they, no such thing as they. How do you hold Mr. or Mrs. they liable? Well, whenever I say they, I'm typically either speaking, and I try not to just use they, because, who do you know what we're talking about? And I do agree that it kind of takes the liability away from the individual. And what I'm really talking about is bringing back your responsibility and stop depending upon the governments and the central bankers. But when I say they, who am I talking about? I'm either talking about the government, I'm talking about the central bank, and it could be different ones. It doesn't matter. I could be talking about Wall Street. So for me, those are those they. But I think mostly I do try and define that a little bit more so you know who I'm talking about. But how do you hold Mr. or Mrs. liable? I'm not sure what you mean. You mean the naive public that was born into a system that they were taught to trust? They are liable. Inflation holds people liable for believing the lie. But we're also forced into it because that's our tool of barter. So if you want to get a little more specific with that, Alex, we'll see if we can go back into it again. But Dowbreaker asks, food, guns, ammo, shelter. Can't eat gold and silver if it all falls apart. 100%. That's the whole point of the mantra. However, right, food, water, you die without those. So absolutely. But, these things are all so barterable. Anything physical is barterable. Any talent that you have is also barterable. And that's great. But it's based upon a coincidence of wants, right? So if you have what I want and I have what you want, it makes that transaction very easy. However, what if you have blueberries and I have broccoli and I want your blueberries, but you don't want my broccoli? I have to go find somebody, but you want lingonberries, okay? Well, then I have to go find somebody that wants my broccoli that has lingonberries so that I can get those lingonberries and then come back and conclude that transaction with you. The challenge is that broccoli, lingonberries, strawberries, all of that, they have a shelf life. I mean, a lot has been tried over the years in terms of money. Foodstuffs, rye, cows. I mean, can you break a cow in half? So you have to understand that really what gold and silver do is they smooth out that coincidence of wants, because this is universal. Silver is universal, so is gold. And it doesn't degrade over time, right? If it has a shelf life, you got a problem with it. So I do agree, it's food, water, and by the way, in food, I put medicines, because food is the single most important medicine that you ever put in your body. So it's really important to eat cleanly so you can think clearly. And also it supports all your other functions. So food, I mean, what about water? Because you can't live without water. What about energy? If you have no energy, then at least to be able to keep your refrigerators and your food and your freezers running, you got a problem. You're going to lose the food. So there are long storage food, etc. So I agree with you on food. Guns, ammo. You know, there are many people in my bug out group that are very attuned to both guns and ammo. Ammo is highly barterable, especially if they have the right gun for the ammo that you have. But here's where you hear me sigh. Yes, if some really evil, bad people are going to come and attack me or my family or anybody that's in our group, yeah, we're going to fight to protect them. But what I'd rather do, honestly, is flip and feed them. First of all, we have to come together because it's all been divide and conquer, and so we have to come together. So you do need ways to protect you. I agree with that. I don't really ever want to have to kill anybody. I mean, I just don't. I'm not saying I 100% wouldn't. I would certainly do it to save my grandchildren or my children. I would certainly do that. But you need more than food, guns, ammo, and shelter. You got to have shelter because you got to have a place to make your last stand and set everything else up. But seriously, come together in community and help each other, because there is so much power in numbers. There's power there. You can help support each other. And if you're great with guns and ammo, that's good for the group. And if you're great with growing food, that's good for the group. So I would say get ready, get prepared, build that community so that you have some people with the guns and the ammo, maybe other people have food, maybe, because one person can't do it all. Is that it? Oh, sorry about that. Okay. So thank you. Cryptonomics 7 says, will do. Okay. China has placed restrictions on silver as of January 1st, 2026. Thank you. You're absolutely right. They have. That is creating more, all in caps, artificial demands from corporations and big players. So it's not all monetary-based demand. Okay, you're absolutely right, and thank you so much for pointing that out. I appreciate it, and it's true. And when you add on to that silver also gets used up, that creates, and you've got a whole mountain of demand coming with all of this AI infrastructure built out. So you're right. It's not all monetary-based demand. Thank you for pointing that out. I appreciate that. And Connor McCarthy, 5960 says, Peter Schiff says it's not worth waiting for a pullback on silver and that it's now a matter of which peak you want to buy at. Do you agree with this sentiment throughout 2026? I agree with the sentiment until we go above fundamental value. I don't really look for pull. I don't care because I'm not a trader. I am a long-term strategist. And in this case, 100% I agree with Peter. 100% I agree with him. Just Do it. Get it done, because we don't know when we're going to lose our choices. And Ernest DeBella says, rock and roll hoochie coo. Lynette, what crops do you grow in your garden for preserving, canning for emergencies, or are together planning on trading silver for food in those circumstances? Well, we grow a lot of crops. So I know Chef Jason was just canning a whole bunch of pears the other day. Delicious. So a lot of the stone fruits, also green beans, so a lot of vegetables. I know he's put back a lot of, broccoli. I don't usually like frozen cauliflower is not very attractive to me. But actually, Jason would probably be better at answering that question than I am. Should we call him in for a minute? Okay, or yeah. Or you can... He doesn't check his... Oh, okay. Well, he's got his head down. So I'll answer... Well, let Chef Jason answer that question. He knows it better than I do since he does it. I just get to enjoy it and eat it. In the meantime, I'll answer the next question and then. God, family, country, stacker. Lynette, you look great today. Thank you so much. So silvery. Thank you. Question. What do you think of the statement, if all you have is a brick of gold, you'll be buying a loaf with a probably brick of gold? And I would agree with that. That's why we have a variety of things that you use. But just keep in mind, is he still here?
He just stepped out.
Oh, he just stepped out?
Yeah.
Okay. Well, I'll have him give us a list, or maybe we'll do a little video on it so you can go in and see where he's canning all of this stuff. He just made more hot sauces, and it's fabulous. But the answer is yes, because that is barterable to finish Ernest DeBella, and we'll do a video so you can see what we're growing and we're preserving, but as much as we possibly can. And can you go down a little bit more for the God family? There you go, brick. So yeah, the question is, or the statement is, if all you have is a brick of gold, you'll be buying a loaf of bread with a brick. You don't really see, other than when I was showing you that example where I have bricks, because you're absolutely right, that is not usable at all. What I have rather are layers of ways for me to pay for something, right? You got cash. That's the first line of defense. Even if it has no purchasing power, it's what people will recognize first. And then again, once you're done with that, maybe Goldbacks, maybe glint, kinesis, a variety of sizes of both gold and silver. The gold, you're not going to take that to the grocery store. Nope, too expensive. But you will use it to pay your property taxes, because you can have your house fully paid off. But if you cannot pay your property taxes, and I did a video on this not that long ago, and I'm pretty sure that's already released. If you don't have the money to pay for your property taxes, you'll lose your house. Okay, so this kind of thing for property taxes, medical expenses, this is what I would take. A little piece of silver is what I would take to the grocery store to buy my bread or my wheat. I could take this wonderful little iced teaspoon. That's what it is. Got a little hole here. It's marked right here. Says sterling silver. I could take this and use this because it's silver. So silver is what I'm going to use if I go to the grocery store. But there's also an advantage because, occasionally people will come and they'll help us here on the farm. Well, if you go to a farmer's market and you meet the people that are growing your food, there's always work to be done on the farm. Give them a day of your labor. You'll probably go home with a bunch of produce and maybe even a new skill set. So, it kind of depends on the circumstances, but the layers that we've built into the Zang Enterprise Sound Money strategy addresses all of that, so that you're not going to use your brick of gold to buy a loaf of bread. You're going to use your dime, or you're going to use your sterling silver iced teaspoon or cut off a piece of it, not the whole thing, right? I wouldn't care if I cut this up, wouldn't matter to me at all. So yes, that's why it's built in layers, so that wherever we are on the trend cycle, we could be even shorter term for emergencies, intermediate term for converting into income producing assets, and long term for legacy. There are layers of what we do in each one of these areas to address that. But yeah, no bricks, not silver or gold. They're just not usable. And Shan H107 asks, Bixware, my good friend Bixware. Bixware says that there way more gold in the world than reported, like 2 million tons, not 200,000 tons. How does this affect the price of gold, if true? Well, number one, personally, I don't think it's true. But even more, let's assume for a moment that it is true. What you would do is you would put that calculation into the level of debt, because there is still a finite amount of gold. There is a finite amount of silver. So might it impact the price if that turned out to be true in terms of this stuff? Yep. It certainly could, but it's a nice statement. I don't know, the Department of the Treasury, or the Interior rather, the Department of the Interior runs an annual survey of all the gold that exists in the ground as well as above ground, because gold is indestructible. So, yeah, that's just Bix's opinion. And he gets to have one, because, there's some things we all have. And an opinion is one of them. I'm sorry. And She Can Homestead asks, hi, Lynette, what is cleaned jewelry grade? Ah, good. Mean with pre-1933 coins. Does it have a negative effect on the coins? It's more affordable. I'm trying to figure out if there is a negative. No, that would be your least expensive. That's pretty much, when you see me holding up, that's pretty much what that is, right? So I like this, and I like it for the savings part of my portfolio. It depends on what you're trying to accomplish, because there's gold, and then there's gold, and there's silver, and then there's silver. So that's why establishing your goals and where you are makes a whole lot of sense. But, it just means that it's just the weight of the gold, and it's plenty blemished, and it can get even more blemishes, and it doesn't really matter, but it's still the same gold content weight. So it's just about the weight of gold. I don't see a negative in it. Now, if I'm trying to use this for a different function, well, then maybe that's a negative. But for your baseline, for your savings, for your emergencies, for your barterable, for that first line of defense, there is no downside to this that I can see. And it's what I do for myself. So there you go. And TAC94808 asks, could you clarify about paying off a house debt with gold, lopping off zeros and stuff like that? Yes, actually, I think you're going to be much better off, because I know I talk about it all the time, but it's kind of hard for people to see how it works. We just recorded a video, and we will show you all of that. So if I could just ask you to be a teeny weeny bit patient, then I don't know exactly when it's coming out, but it'll be coming out pretty soon. And therefore I can talk about it, but you'll also see what I'm saying visually as well as verbally. And Mona 1930 asks, hi, Lynette, I'm new here. Well, welcome, Mona. I'm glad you're here. I am young and want to make a first small investment. Where do I start? Is it too high now for me? And would I be better off paying off my debt? Okay, so there's a few things in there. Number one, we believe so strongly that everybody needs to own gold and silver that unlike most other places, we have a 1 ounce silver minimum. That's it, 1 ounce of silver. But again, Mona, there are so many different ways that you can accumulate if you just know what to look for. Like, it's not as easy. It used to be very easy to find sterling silver in yard sales and estate sales. It's not in secondhand shops and things like that. It's not as easy as it once was, but it's still possible. So you also want to look at things that are marked sterling. If you go to, like, say, an antique mall and ask, an antique mall has a whole bunch of different dealers and they all specialize in different things or maybe even some of the same things. So you ask them for the dealer that specializes in silver pieces. That person, and probably lots of other dealers there, will have junk silver. And I'm not referring to the coins in this. I'm referring to things that are broken and bent and tarnished, which means they can't sell it. Now, if they take it to a smelter, as we were just hearing, some of the smelters have been so inundated with people wanting to sell their silver because they don't understand what's really happening, that they pay below spot. So, and I bought silver like that, where I'm just buying it for the silver weight. So a great place to start is, frankly, to call us, right? And start with 1 ounce of silver or wherever you're at, but also learn how to accumulate it on your own. No, it is not too high. It is severely undervalued. And I'm so glad that you're here, at your age or frankly at any age, because here's my favorite question, Mona. How many times can you be lied to when you do not know the truth? And the answer is every single time. So what I'm trying to show you in all of my videos is what the truth is so that you no longer fall for their lies. This really has no value. Go on the Federal Reserve Education Department, the Fred, and go to the purchasing in the search bar, put purchasing power of the consumer dollar. And what you will see is in that left-hand axis has a big fat goose egg, a big fat zero. This isn't worth anything, but we've been taught to put value in it. That's why we're willing to work for it. This is the biggest lie ever. If I were head of the Fed, that would be gone. And actually, I've ripped this bill so many times. It's the silver and the gold that actually has value. Why? Why do these things have value? Number one, they have not been able, and they've tried for thousands of years to recreate gold and silver in a lab. They cannot do that. They figured out how to do it with diamonds, but they have not figured out how to do it with gold or silver. Okay? Number two, again, with silver, 36 different entities, and there are probably more, that's just what I counted, 36 different entities that use physical silver in their manufacturing and for their work. 33 that use gold. One, the financial system uses dollars or any of this fiat money. So why is gold and silver? Why doesn't it matter how much it is in this? Because this has zero value. That's why. We don't know it yet. But officially, 3 cents out of the original dollar, which means that that's even worse than that. It's supply and demand, and that's what we're shifting into, those true supply and demand dynamics. That's why you have to own gold and silver, because that is the only real money that actually exists, period. This other stuff, this is just about transferring your wealth and getting you to work for less and less and less without you realizing it. It's called perception management, and it really ticks me off. Really ticks me off. So I'm glad you're here. Give us a call, because you can also work. This is true for any of you. You can have this conversation with any strategy specialists. I see them all the time. You know, we work together. If some of you have called and I've been there on a Monday, I mean, soon I'll be there more, but you know, if you're on a video call with one of our strategy specialists and I see it, I'll always pop in and say hello. They know where to get me. They know where I live. They have my phone number. We work very, very closely together, and we are super keen on education because we don't want you to be lied to. You might not like what we have to say. You might not agree with what we have to say. That's okay. It's a community. So I'm very glad that you're here. Yeah, just start buying gold and silver in any form at all. And as far as paying off your debt, fixed rate debt, we account for that. Variable rate debt, that's the danger, right? If you don't get out of it before we hit hyperinflation, you will never get out of it. So you do want to whittle off your debt. I don't know your circumstances. Does it have to be one or the other? Can you do both? If you can do both, do both. And SQ7944, shout out to Martin, strategist at Zang, for being very efficient and having great client service skills throughout the process more than once. Thanks. Thank you so much for letting me know about that. I just saw Martin yesterday, and he's down here now for a couple of weeks. So yeah, he does a great job. I've worked with Martin for maybe 8-9 years. You can ask him. So thank you. I'm glad you were happy with him. That's exactly what I like to hear, because all of us are here to be of service. All of us. And we do all work for you. And Crypto Money Monkey 68 says, Miss Lynette, how realistic is it to use metals as collateral to secure a loan? Well, it depends on where you're going to. There are some banks that will accept that as collateral. And I know that when I bought this house, I could use my gold holdings to qualify, because I don't own any stocks or bonds or any of that crap anymore. And so I couldn't use my brokerage statements. So how realistic is it? I think as this evolves, you'll see it be more and more realistic. Is it great to do that? I mean, I have to leave that up to you. No matter what I say, you have to do what you're comfortable with. At the end of the day, you're the one that's going to reap the rewards or suffer the consequences of any of the choices that you make. So you have to do what you're comfortable with. But I think it's very realistic. I think it's going to get a whole lot more realistic. It's still new. But think about this. I mean, does Wall Street really talk about gold and silver up until it's flying? No. And yet it's outperformed pretty much every other fiat money asset out there for 10, 20 years. No, more than that. Right? But they never talked about it. Wall Street didn't talk about it because they didn't want you to know it. Now they're talking about it because it's gotten out of their control. So as more people become aware of it, yeah, I think it'll become more and more realistic, Crypto Monkey. I do. I don't know whether that's good or bad, but I do think it'll be more realistic to use the metals as collateral. Trouble is, then you would have to hand over the metals, and if you don't hold it, you don't own it. That's the challenge. But at There's a Marie 1089 asks, Lynette, I am curious about, negative interest rates for CBDCs. Could you explain how that works and how it eats up the premium of your account value? By the way, I so love you taking time to educate us. By the way, I love it too, and thank you so much for being here. Negative rates are really, really important to understand because they were tested in 2009. And by the way, they were also tested back in 33 for a minute or two. But negative rates means, and it's not just the CBDCs, it's when we get into a fully digital system, if we can't battle this and get sound money back in the system again, then everything will be digital, which means that they can control everything. And if you read, something wonky just went weird. Am I still on and recording? Okay, now I can see it again. Is everything okay? You guys can hear me?
I think it's catching up the signal.
Catching up the signal? I don't know. All of a sudden, there were just all these lines on the screen, and then it went blank for a second, and then it came back. So as long as they can hear me, I'll keep going, as long as they're there.
Okay, we're back.
We're back?
Yeah.
Okay. So I'll ask the question again and answer it. But curious about negative interest rates for CBDCs. Don't get stuck on only CBDCs, because what the central banks have talked about is implementing negative rates in the bank account. So now, remember, there are 4 key functions of money. This is how it was sold to us to begin with. But it needs to be a unit of account so you can price stuff, a medium of exchange, so if I give you this, you'll give me that, a short-term tool, store of value, so that you are fairly paid for your labor. That's the one I want you to keep thinking about. And a long-term store of value, so that no matter when you use this money, you're always fairly paid for the labor that created it. Fiat money, this stuff, removes that long-term store of value, because everybody now knows if you just take that money and you put it in your mattress and you go to use it, heck, these days, next month, next year, whenever, it buys you less and less. It takes more and more in this country, in the US, dollars to buy the same goods and services. So that performs 3 functions. When they go into the digital system, even if they're still going to allow some cash out there because they don't want you to know that anything has changed, there will be chips in the bills. Now, you get your paycheck. It's automatically deposited in your bank account, and you immediately start losing principal. Negative rates erode your principal. So now, instead of the bank paying you that paltry whatever little bit of interest for the risk you're taking, they charge you for that deposit. So you're sitting there, and let's say you got $100 in your bank account as it gets deposited. You could sit there and watch it go to 99 and 98 and 97 and so on and so on. And you know that you haven't gone out and bought anything. That's what negative rates do. Once they have gotten all of the purchasing power out of the currency, they got to attack your principal. But even if we don't do an official CBDC in the US, bad word, what do you think the stable coins are? It's the same mechanism. So negative rates attack your principal, even though we're told that really that's a choice. Well, okay, you tell me why I would bust my butt working and then loan you money, agreeing to pay you to take and borrow my money. That makes no sense at all. Who would you do that for? I mean, I'd only do that for my children. Other than that, why would I do it for a government or a corporation or anybody else? Why? I wouldn't. I work too hard for that money. But you know, you get all the purchasing power, there's really not much choice. So really, that's what the negative rates are about. That's why if you're building out your strategy, your first line of defense is cash, get it done now before they put the chips in there. Get old bills. I mean, I do in this mess have like 3 iterations of $100 bills. And it's always interesting when you're looking at this. Where's the other one? And I don't even know. Here it is. Okay, I don't even know if you can see it. okay? But can you see the picture and the face on there? This bill was printed in 1990, okay? 1990. This is I don't know if it's exactly the next iteration, but this is the next iteration of the bill that was printed in, where's that number? I don't see it. Oh, yes, I do. I'm sorry. 2006. 2006. Can you see the difference between the two of them? Okay. But hey, they both have the same face value, even though you bought a lot more in 1990 with this $100 bill than you could in 2006 with this $100 bill. And then we moved on to that one. Okay? See how much alike they look, except this one has that security strip in there. But, they want to prevent, anybody from printing this money. So they put the strip in there. But how do we know that there is not a chip in there right now? And if there is, the reason why they put the chip in is because if you're sitting with cash outside of the bank and you go to spend it or you go to redeposit it, it will reflect all of the negative rates that you have been charged across however long that period of time is. So in other words, let's say you've got a $100 bill and you go to use it and you may only get credit for 75 of it or 50 of it or what have you. That's negative rates, and that's how it attacks your principal, and that's what they've talked about doing. Because once we are fully digital, these are their words, not mine, no limitations to how low we can push interest rates. Because think about this. If you're watching your bank account evaporate and you know you're not spending your money, what are you likely to do? You are most likely to go out and convert this into anything that could hold its value better. So that's what you do during a hyperinflationary event, right? People would stand outside of the factories and as soon as one of them got paid, they'd rush to spend that money. We saw it in Venezuela and Zimbabwe. We've seen it all over the place. So this is just another way of a controlled demolition where they're in full control. But if you have gold and silver and food, water, energy, security, barterability, wealth preservation, community, and shelter outside of the system, they don't have that control over you. If everything you have is intangible and they say jump, you have to say how high. If you're positioned to be independent, you can go, nope, not going to do it. That's the position I want to be in. What position do you want to be in? And again, if I've explained something and I didn't really hit it the way you wanted me to, let me know. I'll try again. And Mr. Pitteroni 1, hi Lynette, when purchasing MS grading slab gold coins, he's referring to this, do the numbers really matter, or should we just get it close to melt value with the high premium? Also, when would the number matter? I'm not really sure what number you're referring to. Could you let me know? But if you, again, I'm sorry to ask you to have a little bit of patience. And I did show you this last week. I'm working on a piece that on the numismatics, specifically on the collectibles, so that you can see how everything works relative to the spot market, relative to the raw coins or the bullion, and then going up in the different mint state levels. Because I've done these studies over all the years, and there's gold and then there's gold. So what are you trying to accomplish? And I'm not saying that you can't accomplish something similar using anything, including silver, right? I'm not saying you can't do that. I'm just saying that there's always the right tool for the job. Because 100% I have hung a picture banging the nail into the wall with the heel of my shoe. I've done it. And it works, right? I've been successful with that. But frankly, if I have a hammer, it's going to work better. It's going to be faster. It's going to be cleaner. So it's always the right tool for the job. That's why we put your goals first. That's got to come first. Otherwise, it's the tail wagging the dog, and we'd rather have the dog wag the tail. So if you can just be a teeny weeny bit patient with that, I have it up. I'm already in the middle of it. I've gotten back all the responses from the strategy specialists because I sent it to them so that they could find the holes. And hopefully I will be able to work on it this week. And I'm not sure if I'm going to be able to get it all done. But if you can have a little bit of patience, it is already in the works. It's not something I even have to start. I've done the heavy lifting. I just have to do some moderate lifting now. And I think that's it for today. So this has been great. Tuesday is my very favorite day. I cannot wait until we can do it in person as well. We're getting there. We are totally getting there. I've been talking about it a long time. But thank you guys so much for being here today. I love all the questions. I'll see you next Tuesday. Bring more questions. But we are this community. And we've got to keep growing this community because we have to make a positive difference in the world. It's why we're here. We need to come together and help each other and have some patience with each other. And until next we meet, please be safe out there. Bye-bye.